Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, December 12th, 2011 is sponsored by Realtik. Alright guys, let's get right into the mix today. Markets are taking a hit. Again, it's very much like a market that continues to go up and down and up and down. And that's what we've seen over the last 3 trading days going back to last Thursday. Last Thursday, if I zoom out a little bit, we can take a look. This is the intraday SPY chart. So again, giving us an intraday bias on what's happening on an intraday level, ups, downs, all arounds. And you can see here from Thursday, which was 12/8, December 8th, the markets came down very sharply. Then last Friday, the markets reversed. Now today, back down they go. So the market is a little bit of a dual personality type market right now, and we have to just continue to follow the larger trend. That's really how you're going to elevate your game in terms of trading. All right, so again, a lot of traders tried to pick up the micro moves. They get whipped out by the emotion. Thursday, they got scared, which meant they sold their positions or went short. Friday, they lost their money on the shorts or went long. And then today, they're getting whipped out again. The key is to look at the larger time frame, zoom out more, and this is where you see the true value in the charts. And the true value in the charts is very easy to spot now. And what I'm going to do is actually go to the 60-minute chart, and we'll do that same thing, zoom out, and you can see it very, very clearly. Here's the move up that we had, which was a fantastic move up. All right, we basically went from the 116-ish area on the spiders all the way to about 127 and change or so within about 1 week's time. Since that pivot high was put in right around the the 2nd, 3rd, 4th of December in that general vicinity, the markets have started to chop sideways to lower. Now again, if you look at the micro setting, which is the down move Thursday, up move Friday, down move today on Monday, that's what scares the amateurs. That's what makes you, miss the game or miss the next trade or miss the next positioning for the trade. If you look at the larger time frame, look at this. Look at what happens when I put in these lines. And essentially what you start to get is a parallel line movement, sideways, downside, which off of an up move is bullish consolidation. And this is known as an in spirit of bull flag pattern, which again, it's very choppy, but that's the basis of what's going on in Europe right now. When you have this type of action in Europe where things look great one day and then horrible the next day, the markets are going to do this to you. So you have to look at the bigger time frame, which again sets us up for further upside into the end of the year. I repeat, further upside into the end of the year. Now, if you want to start making money like we've been making money, and just to give you a sense, folks, this is what we've been doing. Just over the last month in time, what have we done? We shorted the market up here, covered down here. Went long right down here, sold right here. All right, so again, short making money, long making money, and we even have a short on the table right now in MasterCard that we're in the money on right now, playing this little bit of a pullback. But for the most part, you're starting to see or starting to look for the next bigger move. Right now, this is just a small move down. You can see the low of the day right there to the 20 moving average. You have the 50 right below. My guess is the market on the daily chart of the S&P does not get through this area. It holds steady here, and we actually start to turn up later this week. Really at any point, you'll start to turn up. Could be as early as the next few days or later this week, I would say. But bottom line is, again, the move will take us back to this area right here, which is right around the 127, 128 level, then the 129.50, and ultimately we may see a move up to the 132 to 133 level on the SPY. All right, so again, it's the bigger chart pattern right now you must be focusing on. If you're letting the intraday swings like up today or down today as it is, and then up tomorrow and then down the next day, if that's influencing your trading, then you're doing something wrong. And you need to join the elite pros here at In The Money Stocks and start being on the right side of every single move in the market. Speaking of which, let's take a look at that MasterCard short right now. Beautiful downside here. MasterCard down about $6.30. Where was my short, guys? You want to know how good we pinpoint this stuff? I'm going to show you right now. All right, I'm going to go back to the charts, take this pivot low, just drag it right up, and that would exactly tell you where my short was. Right there at this pivot top. Let me zoom in. There it was, on the gap up right here, this day. Look at how you nail the tops. When you're with us at InTheMoneyStocks.com, folks, we're using strict proprietary methodology to dictate entries and exits. And this will give you the best possible short level, the best possible buy level, and you can literally capture the biggest move possible on the markets. And the beauty of this right now on the MasterCard is we nailed the top here. We were in the money nicely. You made a little bit of an in spirit of bearish pattern, but it's setting up for more downside. And the next downside move, to my knowledge and my analysis, is going to come down to here. And MasterCard should go down to about 357, 358. And then if you get through that level, the 1250 moving average is the obvious point. So again, some good downside here. Once we're down in this range, I'm up basically 10% on the trade. I'll definitely take half off and pocket half of those profits. And I have a break-even stop already in the trade anyways. But I'm just giving you a sense of what we do here at themoneystocks.com. And one thing to remember, folks, 7-day free trial. Simple as that. You want to try the Research Center out, which is our main product for swing traders and the average person out there, the average investor who's looking to start to grasp and take control of their investments and be on the right side of the market and really maximize gains and outperform institutions. Because frankly, that's what we've done 10 times over this year. You know, when you have 3 out of 4 fund managers negative on the year, and the other one fund manager barely beating the S&P 500, slightly positive, and here in the Money Stocks members are up literally 100% on the year, there's a big difference there. And that's what it's all about, folks, just focusing right here on learning a methodology. We give you our trades live. Take the 7-day free trial to the Research Center and step your game up now. You know, it's so funny. People sit there and say, oh, should I do it, should I not? And then they're just losing money because we're making money. And if you're not making money, you're doing nothing in this market because you're losing to inflation. Even if inflation's 1-2%, if you're not making money, you're losing it. That's simple. All right, so again, that's what it's all about. Let's go back to a couple other charts here. We are seeing commodities take a hit today. GLD is getting crushed. Look at this head and shoulders pattern. I've talked about this head and shoulders pattern to my members at the Research Center in the intraday stock chat, which again, both have the free trials for them. Look at this chart. Head and shoulder, shoulder, head, shoulder. That's a breakdown. It's a beautiful thing. This is going right for the 200 moving average. All right, you want to see the SLV, which is silver, same thing. All right, hasn't quite fallen as much as the GLD on the charts wise, but it still is in play right now. Here's your neckline. You're kind of hovering right on your neckline right now. Great chart. Great, great charts. Let's take a look at the USO. USO is down about 75 cents. What's interesting about the USO short term, take a look at this. Thursday, big down candle. Friday, big up candle. And then today, gap down and negating. So they're just negating each other. You're just chopping around. And this is a good example of what I was talking about earlier in the day or earlier in the video. If you get too caught up in the short-term moves right now, you're going to miss the bigger move. And that's what you can't do, folks. All right, too many people get, oh, the media's talking like this, so it's making me, emotionally biased towards the downside or upside. Ignore that. That's junk. That's garbage. You must step above that. All right, you must come here, take the 7-day free trial, start learning how to profit in any market by reading the charts correctly. We'll teach you this proprietary methodology, folks, and this is stuff that institutions don't even know. All right, Goldman Sachs doesn't know it, and that's why we're beating them profit-wise, percentage-wise this year as well. All these guys out there. Yeah, they have trillions of dollars to trade. That's why they make $1 billion or $2 billion a quarter, but needless to say, an average investor is going to come here. They're not going to have the $1 billion to trade. They're going to have, 100,000 or 50,000 or whatever it may be. Maybe some have $1 million, who knows? But they're going to literally double their money. If Goldman Sachs doubled their money every year, oh, they'd be a lot bigger, trust me. But they can't even perform like that. And they use black box trading programs, which are nonsense, little computerized programs to scalp a penny here and a penny there, just to do it 100 million times a day. And that's why they're making their money. So again, folks, there is an answer out there. It's a beautiful answer. And it is in themoneystocks.com. Come join us. 7-day free trial to the Research Center, 7-day free trial to the intraday stock chat. Taking a look at the charts, guys, let's zoom back in. And right now you're making a little bit of a sideways consolidation pattern. You have gotten above the 20 moving average. Could dictate a little bit of upside here. I wouldn't be surprised if we have a little bit of an upswing, possibly towards about the 124 level on the SPY. But that short term is really your upside target area. Okay? We'll continue to follow that very closely here into the end of the day. I think that's about it. I mean, dollar's having a big day today. Dollar's up quite a bit. We'll watch and continue to follow that dollar. Dollar has an in-spirit of bearish pattern on the daily, but it's close to failing, so we got to watch that very, very closely. That could be a key decision maker based on whether or not we're going to position ourselves long or short for the next big move, which is on the horizon, guys. I repeat, it is on the horizon based on the macro view that I discussed earlier in this video. All right, guys, have a great afternoon, great evening. Come join us here. Start profiting with the pros. That's simple. Take care.